This is why you need to join the Good Governance Academy today. Unlock a community that's transforming governance on a global scale. The Good Governance Academy is a non-profit global organization dedicated to promoting good governance and collaboration. We align with the UN's Sustainable Development Goals, focusing on conscious corporate leadership and sustainable value creation. By joining our community, you'll gain access to exclusive events like webinars, workshops, and roundtables featuring global thought leaders. Get personalized event invitations, stay updated with community news, and explore our extensive video library. Plus, collaborate on our ESG exchange to create sustainability reporting playbooks. And the best part? It's all free. So don't wait. Join the Good Governance Academy community today and take your governance game to the next level. Visit goodgovernance.academy. Together, let's create a better world through good governance.
So welcome everybody. Greetings from Good Governance Academy. You are all welcome and please share where you are joining. I can see a good afternoon from Michael and Mid and South Africa, Diamond, Justin, South Sudan, and we are expecting more to join us. Thank you very much for joining our session today. And we will be discussing about the important topic related to good governance, which is related to continuous auditing and monitoring techniques. And we know the leadership and the thought leadership, let's say, is Prof Miklos Vasarhelyi and Dr. Lee will be with us. Prof Lawrence also. Together, we are planning to give you detailed information about the major issues and the practices. And I would like to start the session with introducing our project leader, CAPIA project leader, Prof. Lawrence Erasmus. And let's see how many joining us. And Prof. Lawrence is from UNISA, University of South Africa, and he's the professor in Department of Financial Governance and College of Accounting Science. And after having PhD in cost and management accounting, he is dedicated to enhancing public sector financial governance to promote transparency, accountability, and effective service delivery. And he actively collaborates with many researchers, including us, regulators, and oversight institutions, foster ethical governance and value for money public spending issues. And for the professional roles and contributions are quite much, and including editor-in-chief role, Southern African Journal of Accountability and Auditing Research, and many others, I can say. And for the projects, proudly, we have CAPIA, Continuous Auditing in Public Sector Internal Auditing. I'm also happy to join this project, and it's a great honor to continue our work all together. And also, Prof. Lawrence is having another project, a research on Audit Committee South Africa. And these are all connected to our today's session, I must say. And floor is yours, Prof. Lawrence. And thank you very much for this event happening. And thank you for everything in advance.
Thank you very much for the introduction, Cesar, and good morning, and good afternoon, and good evening, whatever applies to your part of the world, to all the participants who've logged in. You know, CAPIA is a registered engaged scholarship project at the University of South Africa. And our activities include PhD studies with a focus on continuous auditing and monitoring, and other research activities that support the subject, especially then pertaining to the public sector. Continuous auditing is increasingly seen as a significant part of the future of auditing, particularly as digital transformation accelerates across both the private sectors and the public sector. But we also need to acknowledge that it is not a total replacement for traditional auditing, but rather an evolution that enhances it. And the reasons are the real-time assurance it provides instead of reviewing transactions retrospectively, then the leverage of data analytics, machine learning, and automated controls that allows auditors to focus on high-risk areas instead of manual testing by identifying irregularities early. That then supports the proactive risk mitigation. So with more transactions occurring digitally and at high volumes, continuous auditing can handle the scale far better than periodic audits. So as a result, the main objective of the CAPIA project is to contribute to the development of the internal audit mechanism based on new technological developments to strengthen assurance services, which is a basic requirement to support the effectiveness of public institutions in South Africa. So CAPIA wants to be an important tool to contribute then to the achievement of more transparent, accountable, and strategic public sector goals to ensure sustainability in the public sector, and hence the webinar today under the banner of the Good Governance Academy. I was fortunate to meet Prof Miklos Vasarhelyi at the 61st World Continuous Auditing and Reporting Symposia in Istanbul last year. And we invited him as one of our keynote speakers to the UNISA College of Accounting Sciences Symposium on Continuous Auditing with Artificial Intelligence only last week, which we held here at UNISA in South Africa. So as the foremost authority on continuous auditing, it gives me great pleasure to introduce Prof Vasarhelyi and Dr. Lee for today's case study presentation on continuous monitoring and auditing on government accounting systems in the city of Burbank. So let me give a brief bio for both of them. Prof Miklos Vasarhelyi is the KPMG Distinguished Professor of Accounting Information Systems at Rutgers, the State University in Newark, New Jersey, USA. His research interests include continuous auditing, applied artificial intelligence, and analytic methods in accounting. Now listen to this. He published 6 volumes of artificial intelligence in accounting in the period of 1989 to 2005. And we joked about this. People were probably thinking he was mad at the time, but he was so far ahead, really. Prof Miklos got his PhD at the University of California in Los Angeles and has taught at the Catholic University of Rio de Janeiro, Brazil, University of South California, Columbia University, and for the last 35 years at Rutgers. He heads the CAR Lab at Rutgers, and the Rutgers Accounting Information Systems program has been ranked #1 worldwide for the last 20 years, more than 20 years. Now, Dr. Heejae Lee, Erica, I heard is what she's called, is an assistant professor of accounting at Grant Valley State University. She earned her PhD in management at Rutgers Business School in 2023, and her research interests include exploring how technologies can leverage decision-making and information processing in organizations, including business and government. Now, she has expertise in machine learning, text mining, and data visualization, and participated in a research project to embrace these technologies in research and practice. She is leading the research project for the City of Burbank in California in collaboration with the Government Finance Officers Association to develop a continuous monitoring system for local government to enhance their decision-making process and accountability of government accounting information. Impressive, and we can't wait to listen to them. So I will hand over to the presenters. Thank you very much.
So Eric, you can open.
I'll share my screen.
Yes. Okay, full screen. Great. So, Erica, I'm going to move very fast. Please move it around because Erasmus Lawrence already covered most of the things. So let's go to the next one. So we are going to basically talk a little bit about the research we are doing at the Car Lab, and then the basics of continuous process auditing. And then we're going to talk a little bit about a project in Brazil with state of Santa Catarina. And finally, we are going to spend most of time on this talk today talking about Erica's led project in Burbank. Erica, next one, please. So next one. So as Lawrence mentioned, we have published 6 volumes of artificial intelligence accounting and auditing. And next one. However, these went from 1989 to 2005. And we stopped the series because there seemed to be very little interest in AI at that moment. And see what's happening now. AI is blossoming. And we actually are in the process of publishing a volume which we call exogenous variables, which talks about the data used in AI, expanded set of data. So Erica, next one, please. Keep going. So the Car Lab, as Lawrence mentioned, has been ranked #1 in AIS for over 20 years. Next one. And for you to know, we have actually recorded pretty much all accounting classes at Rutgers. And it's not very high quality because recorded in the classroom, but is available for free at YouTube on our Rutgers web. And you can use it with all the advanced analytic courses. We have that next. We also have developed a thing we call SWAC, School with a Million Courses. Actually, at Rutgers, we call it BYOC, Build Your Own Course. And we basically have around 70 modules, basically with the advanced technology, including continuous auditing and machine learning. And basically, you can go in there and build what you want to learn. And what we actually have done is applied it at Rutgers, and it's extremely popular. We have over 350 enrollments per semester. Erica, next one, please. Keep going. So I just a little bit go to memory lane. Between Columbia and Rutgers, I was at Bell Laboratories, and there I developed this first continuous auditing setting. And it was for the largest biller that the AT&T had, which at that time was one of the largest billers in the world. And basically, we developed this whole idea of continuous auditing, which we first called it continuous data auditing. And the basic theory behind it is very simple. Compare data that you extract from the systems of the company with a standard. And if the variance is very large, create an alert. That's what we did. We actually did 2 types of systems, one type for auditing, the other type for management to use. Because once auditing was installed, management said, yeah, we don't have this information. So we basically created a system for them. The first one, the auditing was called CPAS, Continuous Auditing System. The second was for some reason called Prometheus. And maybe 5 years ago when I visited again, they were still using Prometheus. Erica, let's go to the next one. And this is actually an image of the system, and you can see the little circles or ovals, and they were counting the number of transactions. We recognized the number of transactions, and if some of the bills disappeared, we created an alert at a certain date. Next one, Erica. And the elements of it, and this is actually key theory on this, we created these elements, we call it metrics, which is measuring what was in the system. Standards is what to compare with, and standards had basically what should be the process and what is acceptable variance, and then all kind of analytics we used. We were very careful not to deal directly with data. We are afraid of congesting AT&T systems. So what we did, we extracted data from screens, screened the data. Today we call it screen scraping, and created our reports, hundreds of reports. Go ahead, Eric. And so the data comes out of an ER system. Keep going ahead. And you measure it, go ahead. You compare it with the standard, go ahead. And see if it exceeds the standard of variance and could be positive or negative. And if it does, you create an alert. However, keep going. However, there is a major development in life at this moment, is the internet created huge receptacles of data that can be used for monitoring and for auditing. Things like number of hits on your website, traffic on the internet, number of cars in a parking lot, etc., very valuable predictive variables. And we have been now developing, impounding them into the continuous auditing project. Go ahead, Eric. And by having these exogenous variables and the traditional data, we can make predictions like of riskiness, of levels of activity, and etc. Consequently, go ahead, Erica. Consequently, you can actually basically block transactions that are not acceptable to avoiding them to go downstream. Go ahead. And the big difference also today is the adoption of these exogenous variables and putting some tools that we are there already. We actually think that since we published the book, the algorithms didn't change that much. They're just perfected. But the big change is generative technology, which allows you to mix qualitative and quantitative information. And I think this will be a total game changer. You'll have very different systems and very different abilities to monitor in the next few years. Go ahead. And I wanted to just mention a little bit the type of projects we do at the Continuous Auditing Reporting Lab, CALAB, and related to AI. And a comment, ironic comment, now people call everything AI. We have been running regressions for 60 years in Ball and Brown model, for example, and we didn't call it AI, but our AI regression is considered AI. And so I try to classify the type of projects we are doing. We have maybe 25 PhD students, 8 faculty, and now maybe 10 or 15 faculty like Erica that work with us constantly. So I see Erica now as much as I used to see her when she was our PhD student. So it's very intense and it's a lot of fun. I don't like Zoom so much with my PhD students because I want them in person. But I love the ability to connect with Erica and Kelly and continue working with them. So the world has changed. So classifying things here is we had a whole set of papers talking about AI, particularly with ESG. Irina Girbau's dissertation is 3 essays on ESG measurement using GPT technology. We have now a bundle of machine learning papers. The first pretty much machine learning paper published in the Accounting Review was us looking at insurance companies' estimates. And then We done a lot of natural language processing, but now GPT is commanding it. And we have worked with CPA firms and now the GFA, the Government Financial Officers Association, creating robotic process automation projects, which is basically second-level automation, where you automate keystrokes. And now intelligent process automation, where you incorporate some intelligent decision-making. And finally, there is an epidemic going on among my PhD students and faculty. Everyone is doing ChatGPT type of projects. And they typically kind of mix with other things and has been incredible. And the capabilities of auditing in the future, and I even hesitate to use the word auditing because Erica will show you we can pretty much influence processes while they are happening very close to the event. Go ahead, Erica. And just to give you an example, we have been working with the GFOA, Government Financial Officers Association, have been an eye-opener for us because they have a lot of access. They got us access to Burbank. And so we are doing things like rethinking how financial reporting internally is. And you're going to see the Burbank project. And then we are picking up the financial statements and using LLMs and create a very nice database that you can now compare statements, estimate if they are if the municipalities or counties are having difficulties, et cetera, et cetera. And we are being able to create reviews that we couldn't do before. And because we can deal with the AFAs, now we can go to the entire 200-300-page reports and pick up notes. And we are planning to create a huge database with all of these things, which will basically equate municipal reporting, financial analysis to business reporting financial analysis, which at this moment is much slower. Go ahead, Erica. One more. Okay, so this is like a project we are doing at this moment with the state of Santa Catarina. And we are basically working with a procurement. And we have data from them. We actually have a person from Santa Catarina visiting in Newark with us. And we have like several types of agents. One basically a query agent that finds things that you couldn't find otherwise. And the other one is very cool. We actually pick up an item that they are trying to buy, compare it with the prices in Amazon, and give an alert if the price has a very high variance. It's very active, and we expect this to be used in many places as fraud detection or a variance management. Actually, I'm going to try to convince Lawrence to try something like that in South Africa and maybe something in Turkey, because we think this is so cool and useful. Then we have all these, we kind of tailorize red flags, and Erica is going to show you the fantastic dashboard that she has developed. Go ahead, Erica. Oh, we have quite a poll here. Let me answer.
Okay. So I'm gonna continue on what Professor Miklos just described. So we are doing this project with City of Burbank, which is city in the state of California in US, and we
Hollywood.
Yeah, Hollywood. Yes, that's where Hollywood is. So we work with the city government to build a prototype of the continuous monitoring and auditing system on their government accounting information system. So brief, I guess like everyone pretty much get informed about what continuous auditing is. This is a process to automatically get a feedback to monitor it on the transactions or the controls or IT system in real time, so we can take action early than waiting until everything is completed. And implementing CACM system can help organization, including business and government, private and public sectors, reduce errors and increase accuracy and improve efficiency of their information system. So in this project, we want to implement this CACM system in government accounting information system. And we develop a framework to guide how the CA system can be implemented in the government accounting information system. And we did some case study with the City of Burbank using their data, their actual ERP data, to build a CACS system using, especially we use their monthly trial balance data for revenue and expenses, and we built some prototype dashboard and the prototype CACM system, and we are looking forward to implement this in the real government accounting information system to provide alert and allow them to monitor the transaction or the trial balance of the government. So in this case study and the framework in general, we use three major technology here. For the first part, but for the data pre-processing, we use the Python code, simple Python code, to convert the ERP exported data in the format that machine can easily perform analysis. And after we pre-process this data, we use the software called Microsoft Power BI, which is the visualization software that can be used if you're using Microsoft operating system. This can be done in other platforms, including the visualization software like Ultrex or Tableau, but we're using Microsoft Power BI, which is most available software that can be used in many government. And also we try to automate some of the procedure to create report and send alert to the management or any user that is interested in this information. And we use Microsoft Power Automate, which is the software that can be used if you're using Microsoft operating system. But this can be done in other software such as UiPath. But we want to show that this can be done in the software that is readily available for most of the time, or if it's not, it can be more economical option for the many government. So that's the technology we use. And as Professor Miklos showed earlier, we can link this CACM system to the agents that can pick up information from the exogenous variable and include this price information and give a proper price, suggesting the proper pricing, or if there's a variance from the proper price or the price capture, it can provide alert to the management or the auditors so they can take action on why there is a huge variance in the price. Or we can also build the agent to collect the feedback from the residents in the context of this government or for the customer and measure the performance or satisfaction of the users or the customer or the residents, so they can evaluate whether this money is well spent or whether the product is well selling or well perceived by the customer. So that was a brief introduction of this project. And so I want to introduce the step of implementing CACM system in the information system. So first thing we're going to look at is the very most important thing. We always need to identify the objectives. What is the objective of the CACM system? If we don't have a right objective, it's difficult to build a right CACM system or create a right CACM system. So we always need to start with this objective. What is your goal here? So why this is important? Because this will make the management or the auditors to decide which data should be extracted and how we're gonna pre-process this data so that machine or the software can perform some analysis and provide and monitoring and provide alert to the users in proper manner. Also, this can decide how and where this data should be loaded in the system. so they can decide the software or the platform they're going to use to build a monitoring system. And also this can directly affect how we're going to design the CACM system or the report that is generated by the CACM system. For this case study with the City of Burbank, we pick up 4 major objectives. So first objective, we identify after we have a discussion with the management is to identify and mitigate the risk related to deficit in the fund balance. Because in the government accounting system, it's important to make sure there's no deficit, because it's not the goal of the government is not generating the profit, but maintaining and providing service to the resident, but also make sure you're having a right balance on the fund they receive from the government or fund they raise by collecting money from the resident. So that was the first objective we identify. And the second objective we identify is mitigating the risk of overspending. So many cases, not only the government, we set the budget to make sure they're using the right amount of money that is allocated for this particular project or particular type of cost. So it is important to understand how much risk they have in terms of overspending their actual expenses. So that's the second objective we identified. Third one, it's important to make sure there's mitigating the risk of errors or irregularity in the month-end balances and year-end balances, because that will be the basis of their financial report. So that's the third objective we identify. And the last objective was overall, they want to mitigate the risk of misstatement. That is related to the third objective. So that's what we identify after we have a talk or discussion with the city government. So this is the objective we followed to develop our CACM system. So next step after we identify objective, we have to extract the data to match this goal or satisfy these goals, which is data extraction on the second step. So this step is process of extracting or exporting data from the data source. And this can be done manually or automatically, depends on the possible solution for the government or the local government. And in our case study, we received we used the monthly trial balance of revenue expenses account of City of Burbank, California. And this time we used 3-year data from July 2021 to June 2024. 3 fiscal year of the city government. This was manually extracted to develop a prototype, but this can be done as automatic process instead of manually extract the data every time. But we can make this automated process, so every period, end of the month, or every day, they can extract the data automatically from the ERP system. So this can be loaded this can be processed after extracted from the ERP system. So next step, after we extract the data, we have to pre-process data in the manner that can be used in the analysis. So this includes cleaning, transforming, or structuring the raw data you exported from the system to be suitable for analysis, because sometimes the way the ERP system export the data is not always good for the users to perform some analysis or machine to perform analysis and provide monitoring, providing the alert to the users. So what we did is we used Python code to load the raw file that we exported from the ERP system. And whenever there's a new file in that designated folder, we can initiate this process to automatically pre-process this Excel file into the format that can be used for analysis and provide monitoring and alert to the users. So this can be done automatically without or limited human intervention with the using of the different technologies. So I want to show the screenshot of this folder. So this is the input folder we have in this prototype dashboard. So whenever there's a new Excel file, we can run the Python code can be automatically run, and it will process this data to the format that can be used for analysis and provide alert to the users. And you can see the new folder include all the outputs we have as a result of this Python process. So what this Python code do in this project is, so when the user export the data from the ERP system, it includes 24 columns for each year in this case, because this one has 1 year trial balance. So, but the problem is it's difficult for a machine to understand the structure of this data, the fact that this is the same data. So what we did is, from this format of this data that having different column, 2 columns for each month, so we have 24 columns every year, but we make this Excel spreadsheet to keep only the first 4 columns, but this 24 columns in this file is converted into only 3 columns. So what we do is we pick up what is the month of this or year of this transaction, and also check whether this is a budget or actual spending or actual revenue. And we create this budget and actual. So the first, if you look at here, so this 38 million date of 2022, July 1st. And this number 38,000 become the budgeted amount, because this is the budget column, and the actual of this July 2022 become the actual column of the first row of the new data. Similarly, we were going to repeat this for all 24 columns. So we will have this August 2022, we have 0 budget and 0 actual, and it will create another row for 2022 September. It will have budget and actual. So this process is designed to help this machine to convert this data to be understandable for the system to perform some analysis in the longitudinal manner. And it doesn't have to involve any human intervention or limited intervention. This will be done automatically by the Python code run through this system. Okay. So that was a pre-processing. The next step, after we process this data, we have to load this data to the platform that the CA system will be developed. So this process is moving the data to the platform or software where the CS system will be designed and implemented. And this can be done manually or automatically, depends on what is the best interest. For this case study, we make this automatic process. So if there's a new file in that designated folder, this will be updated automatically. There is no human intervention needed. It will update the view of the CACM system whenever there's a new file in this designated folder. So you can see here, so we make this data source to be the folder we use for the output. So there's no need of human to change or update this file or update the setting of the CACM system. It will automatically update it whenever there's a new file or new record. So after we load the data, we design the CACM system. We use the Power BI as we discussed, the Microsoft Power BI as a platform in this case, but this can be done with the other type of software or other type of platform. But we use this Microsoft Power BI to show that this can be done with the software is ready available for you. We don't have to have a new software, new platform to build this similar type of system. Okay, so we follow this objective we identify as a first step to build this CACM system. And I want to show some of the dashboard or CACM system we created for this to achieve these objectives. So this one, the first one I want to show is the first dashboard that the user can see, which is related to mitigating the risk related to deficit in the fund balance. Basically, whenever there's a new record of transaction or new record of the trial balance, this will show the revenue and expenses of the City of Burbank, and it shows the difference between the revenue expenses to show what is the net change in the fund balance. So in this way, they can track how much change they have in the fund balance, so they can monitor whether there's a risk of deficit on the fund balance for this year. This can be updated whenever there's a new record. So this can allow them to keep track on the change throughout the different period of time. And also we have this filter, so they can change this view to see the prior year. So they can compare this with the prior year, so to make sure whether this is expected pattern or this is the anomalies that require some investigation by the users. And this is just a summary of the cost center and the account and the fund of this database. And this one also relates to the mitigating the risk of deficit in the fund balance. This one shows the change on this one shows the how this fund balance changed throughout the year. So you can see whether if you change the filter, you can see the number in the screen is changing. So they can identify how much fund balance they have for this specific fund or specific cost center. So, and they can also track the change throughout the year. So they can evaluate the risk of deficit even before they actually close approach the year end. Same thing with the next one. This one is showing that was the deficit and fund balance. The next one I want to show is related to overspending. So the previous two slides is related to the deficit of fund balance, but this one is related to overspending. So to understand the risk of overspending, you have to understand how much budget you allocated and how much you spend so far. So in this system, you can see the difference between the actual and spending. The green bar represents the actual and the blue bar represents the budgeted amount. So whenever there's a new trial balance data coming in every end of the month, you can see the change on how much actual you spend compared to the budget you have for this fund or this cost center. So you can see the green bar is shorter than the blue bar, meaning is they're not overspending overall for the fund level. So in this way, they can understand how much risk they have for this specific fund to overspend the budget, and they can monitor this as a way to control their budget and actual spending. And they can also use this filter to overview different type of funds, and also change the cost center if you want to track on the cost center level. Okay. The next one is also related to mitigating the risk of overspending. So this one will basically shows how much you spend compared to the budget amount for every month end. So you can see here, this one, if you have not overspent based on the amount you designated earlier, then there will no record showing up here, or there's no alert sent out to the users. But if there is a risk of overspending based on what you designated as a part, based on your experience, in this case, we set up 20% as a cutoff here. So if there's if they use more than 20% compared to what they use for this specific cost center compared to prior year, then it will show up the record, and we can set this up to send the alert to the user by sending email. There's a record or there's a cost center that overspent or risk of overspending for this month. So for this case, you can see on March 2023, they have in prior year usage was only 70% at the time of same time last year, but they use more than 90% already. And that's why they show this record here, and that's why the system will send out the alert to the user, because this is not normal compared to what you see in the prior year. You're showing the risk of overspending on your budget. And it actually continue, as you see here. If you compare March, April, May, June of the same cost center, actually they ended up using more than 30% of their budgeted amount. So they can manage this by reduce the spending on the other cost center in the same fund level, but having this kind of system allow them to take action early and get informed about what's going on here. If they don't know about this situation and they just waited until the end of the year, then sometime it might actually resulting in the overspending of this fund. So that's why it's important to have this kind of system. So in this CACM system, the user will get this alert. It will send an email to the user automatically as a report, and the user will can go back to the system and explore what's going on beyond this this risk of overspending cost center. This is another example of different cost center. You can see we on top of this 20% cutoff, we also add this color code on top of it. So if there is increase more than 50%, it's more worse. So we can set up different bracket, like 20% can be risky, but it might not be risky as having increased more than 50% or 100%. So we can set up the bracket based on what is expected risk or what is the perceived risk by the government or the management. So you can see we have this red color for those cost center that increased the usage was increased more than 50%. So for example, you can see they ended up using more than the budgeted amount here. So in that case, they can take if they found that that there is a risk early in the period before they close the year-end book, then they can take action more promptly than waiting until the end of the year. So that's the idea of this continuous auditing and continuous monitoring system. The fact that they can get informed early will allow them to take action in timely manner. And that's the whole idea of continuous auditing. And also, not only they get an alert, but also they can go back to this dashboard and look at the record and explore what's going on beyond this, can help them to use their judgment to take right action and in a timely manner. So that was the idea of the CACM system. So they will get this alert. This one is related to risk of errors in the month-end balance. It doesn't necessarily mean there if there is a spike or abnormal pattern is always errors or irregularity, but giving this alert to the user can be a good way to manage the risk of errors in their trial balance and the financial report. So if you look at this line chart here, it shows how much revenue they collected throughout the fiscal year for a 3-year period of time. You can see the most of the trend was pretty stable throughout a 3-year period, but there was a increase of the revenue at the end of the 23-24. So if we have this kind of situation, it doesn't mean there's errors or irregularity necessarily, but giving this information to the management or the user of this government accounting information system can provide them the area they have to look at and identify the risk of misstatement or risk of errors or irregularity on this account. So that's the idea here. So they will receive this alert on there's a spike or there's anomalies, not normal trend of this revenue or expenses, then they get an alert and they can take action on what's going on beyond this one. So that was the CACM system. Next one is designing the report. So this one is linked to the CA systems we discussed earlier, but this one is more related to the actual report or the alert they're gonna receive. So this can be done automatically or manually, depends on what is the best interest of the users. For example, it can be created to generate the daily report, or it can be designed to generate a report whenever there's a new record. Then they can take actions in timely manner whenever there's a new trend that is not normal or not expected. So in this project, we use the RPA, which is the robotic process automation, using Power Automate. So whenever there's a new record on this dashboard I showed earlier, they will send out the email to the users as a report, so they can see the report and they can look at what are the accounts or what are the cost center that actually relate to this abnormal trend, so they can take action on what's going on beyond this abnormal pattern of this transaction. So that's what we have so far. So based on this is a prototype, as I mentioned, and we tried to implement the dashboard we developed to the actual government accounting information system, and we want to collect some feedback and what are the things we can do better on this type of research. So that's the plan for the future. Also, we are interested in doing more case study, including other government, local government, or the business, to see how this can improve their process and how can reduce the errors and help them to identify those errors and irregularity in a timely manner. Okay, so that was the brief introduction. Miklos, do you want to wrap up the presentation?
Yes, meaning this has been very exciting. The project at Burbank, we continue working with them, and as every one of our many continuous auditing projects, we first develop it offline. Basically, we develop it with a data store or with the data that they provide us, and now we are expecting progressively for them to implement it, and we'll monitor the implementation and keep adding features. We have been doing continuous auditing. I've been doing continuous auditing for about 40 years, and it has been pretty slow adoption. We've done a large project in Brazil with very large bank. We've done a project with AB InBev, with Procter & Gamble. So we've done projects with organizations and municipalities, etc., etc. But now with AI tools and the fact that companies are much more automated and under a lot of pressure, we basically think that this is the moment where development will really happen. And we can see tremendous interest on what we are doing. Go ahead, Erica, next one. And this idea of linking generative to quantitative information is very, very exciting. For example, let's assume that Burbank is interested on doing that. So we could basically harness information out of social media with longitude and latitude of Burbank and see street cleanliness, potholes, many different things that the public is really worried. And we've done that with the city of New York, and we looked at city New York cleanliness, and we could monitor the public soft interest, the qualitative interest on the city. People typically don't say, my city is very clean, and put a post on social media. When they put the post on social media, they're angry about the rats, or they're angry about the holes in the street, or the dirt, or the accident, and that's what you get. And so that would be like a real-time application for service. We actually think that in this domain of public like cities, counties, etc. in the US, the traditional Paciolian accounting model is not really what is needed. What the objective here is not making a profit. The objective here is creating a good balance between what the public spends in taxes and what the city or the county is providing. So we actually think about 4 or 5 dimensions of reporting. One reporting would be just like Erica showed, financial. Second reporting would be very close to budgetary. Third reporting would be infrastructure. Fourth reporting would be quality of service that we could capture basically through social media or exogenous variable. And the fifth one, which is emerging as a very important one, is ESG pollution, basically out of the city. People tend to forget that public entities pollute just as well as private entities, probably more. And it would be very nice to create some kind of indices. And these kind of things could be made available directly to the public. You would have to have a courageous city manager or city council willing to open the kimono and show really what's happening. But we would like to do that. And we actually have an article out on it, and we're going to have a second one reasonably soon. Erica, next one. We like, meaning this, when I was preparing this for South Africa, I had a kind of revelation. I didn't realize how much we have been working with governments. And after kind of talking with my colleagues, we realized that the reason is that it's easier to get the data. And without data, you can't do anything. And many states in the New York, in the US, and some cities have in their constitution that all the data has to be public, while companies have, want to protect who the vendors are, want to protect who the clients are. They don't want to reveal that they had disagreements with their employees. So there are all these limitations. And even here where I live in New York City, they have a very large open data type of thing. But, and so we are very excited about this. I'll be very surprised if in the future that's not one of our main focus. Erica, is there one more? Okay. And so we worked with Brazil, we worked in the US, and now we want to work with other places. And the other idea we have is we create structure like Erica has in Burbank, and we move it to all different places and do some adaptation. One more, Erica, I think. And we think we want to experiment with Gen AI. And we want to experiment in many, many dimensions. If we had the time, I could list you 20 different things we can do with Gen AI, and would be really exploring our current databases and other databases. And I thank you very much for giving us a chance with presentation. And we are open for questions. Erica, is there one more line?
It's just a link to the video recording. Yeah. If you are interested in looking into more different feature of the dashboard, you can use this QR code. This one is available for your PDF file as well, so you can scan it with your phone if you're interested. It's just a 1-hour video. I'm talking about the feature of the dashboard. So please feel free to use this link if you're interested in. I think that's all.
Thank you very much, Prof Miklos and Dr. Erica, for a very insightful presentation. Certainly, I will pursue grant funding from my side to try and get one of your projects over to our municipalities and especially in the procurement environment that most of our regular expenditure comes from. So certainly I'll try my best in doing that. Our time is almost up, but I think let's have a look at the questions if we can still pass the hour, a minute or two. First question from Damien is, how do you determine the standards to which the actuals are compared? What is the mechanism and the controls around this mechanism for these standards to be adjusted over time?
Yeah, our first project is a good example. When we did this at AT&T, I worked with Fern Halper, and what we did, Fern interviewed the people that were doing traditionally the work out of the continuous auditing platform and asked them basically what should be the standard, where do you worry? So you actually work with the actual managers and pick up the standards. It worked out pretty well, and what happened, we typically adapt the standards after use it, because it's not uncommon that the standard is unrealistic and they say standard should be 80, so every day you get 3 alarms. Then you adjust it to the level it is. At this moment is kind of a manual idea. In the future, we can create optimization models or things of that sort.
So we are approaching to the end. Thank you very much.
We have 2 questions. Can we quickly do them?
Yes, please.
Please, Cesar. It's both from Michael. How can we prevent the price alerts being gamed through making the variance below the parameters?
That's something to be taught. Is a good question. We didn't get to the stage where they are active. So I bet you there is kind of second harmonic, third harmonic issues that need to be dealt. That's something for us to think about. Correct, Erica?
Yeah, there are a lot of ways to exclude those outliers. For example, not simply taking the average, but trying to figure out how to there are so those attempt to get around from those alerts. So that is the area that we have to think about.
I'll give you an anecdote that I will not name the location. We had a project whereby we applied some control management for pricing, and we compared the pricing of medications in hospitals with what was being supplied, and did screen scraping out of the website. And we found a lot of alerts. And this was and they basically closed the project because we got too close and fired the 2 audit analytics people that were working in that particular location in Brazil. So we are pretty sure that what we do is pretty effective.
Yeah. Final question. Have any Dutch CCM scripts been included in your work recently?
Not yet. We are just trying to learn about that.
Thank you very much. Cesar, over to you then.
Yeah, thank you very much, Prof Miklos Vasarhelyi, Dr Heejae Lee, and Prof Lawrence Erasmus. It's very, prestigious and esteemed guest speakers. Thank you very much for everything. And you can see the details from the GGA's website for the presentation, and you can always reach us. And I would like to summarize as continuous auditing and continuous monitoring is explained based on metrics, analytics, and the standards by Prof Miklos. And Dr. Lee mentioned about the importance of the risk linking agents to these objectives, mitigating the deficit, overspending, and the errors in month and year-end balance, and combining all of them as risk of misstatement, which is quite, problematic areas for the public sector wherever you are in global arena. So value added part can be set as it's not enough to have financials, but we need to give details about budgeting, infrastructure, and the service quality, including ESG metrics, and there are many other things will be coming. I'm sure after artificial intelligence and machine learning will make things maybe easier, but we still need human judgment, and you are always welcome to share your experiences. And thank you very much for attending this session. This is Sezer Bozkuş Kahyaoğlu from Turkey, and hope to see you in our next webinars. And thank you for being with us. Many thanks.
Can I just say one thing? We would love
Yes.
to come back in 1 year with an example from Turkey, an example from South Africa with Professor Erasmus.
A very good
Very good news. Thank you very much.